Vanguard, one of the world's largest mutual fund providers, has decided it will no longer offer a fund with gold in its name. And it plans to take its position in gold and precious metals equities down from at least 80% to only 25%. Some analysts see Vanguard's move as a further sign that the gold market has found a bottom and that the metal could be teeing up for a reversal. So joining us today is Frank Holmes of U.S. Global Investors. Frank, welcome back.
It's great to be with you.
Do you come bringing good news for gold investors here?
Well, you know what's interesting is this big push by passive investing is the only way to go. And here's Vanguard, cheaper is better, 35 basis points, cheaper. So cheaper is not better. And the options and choices for a lot of investors is going to become more and more difficult if they just want to go passive, because we can demonstrate smart, active money management can outperform it. But what's really interesting is that when the universe of 88 gold producers we follow fell down, that only 6 companies had free cash flow, they didn't get out. And today, we're pushing almost 25 out of the 88 gold producers in the world actually have free cash flow.
So how do you see it then, Frank? Because just when many analysts are calling a bottom, it seems that gold keeps getting more and more under pressure here. Do you think it could turn it around?
Well, I think the big part is all the dollar, and it's much more about the other currencies. The South African rand is taking on the chin today. The Turkish lira, we know it's taken place with the price of gold in bolivars. And for Venezuela, 21 million bolivars for an ounce. So I think that it's really important for investors to look in the context of these other countries that you have gold in your portfolio, because when it starts to unravel, it's very fast. You don't have a chance to jump in.
Okay, so it's not helping gold yet, but you do think the currency crisis we're seeing, you mentioned the Turkish lira, could breathe new life into the gold market?
Yes, I think by prudent investors. And as I said earlier, gold's down 2.5 standard deviations over 60 trading days. The math is in our favor for gold to rally.
Okay, how about on the mining stocks front here? Gold mining stocks, Frank, same story?
Well, I think you want to really focus on those companies that have free cash flow, because historically, based on our quant math of going back over 10 years, that basket of names outperform any index.
All right, how about on the silver front, Frank?
Even more so. Silver will give you a bigger bang for your dollar. Those silver stocks have free cash flow, and any uptick in the price of silver, they just explode in relative valuations. And when we look at math of markets, price reversals are usually one of the key factors people look at. The quant funds do. And also, when you look at the momentum models, that's predominantly what retail people follow. The big money consistently has been price reversal. We are now down 3 standard deviations in many companies with great fundamentals, bullion down, silver down. I think we're due mathematically for a great rally.
All right, Frank Holmes, thank you so much for joining us.